Okay, we're live. Welcome to Wall Street Beats, everybody. I'm Steve Lamar, joined by our oil and gas pro, Bob Morris. We're waiting on Charlie Peabody, who's having some technical issues from his travels. I'm obviously not at my home base. I'm down in San Diego this week. So let's kick this off, Bob. It looks like we've got oil retracing here for the last couple of days. We've got maybe some progress on a deal and some ships moving through Hormuz. And I don't know, what's your take on the latest?
I don't know if we've got movement on a deal, but I was surprised by the pivot by Trump over the weekend in shifting to economic sanctions and away from military action, which he had threatened over and over again against Iran. And it continued to basically lambast prior presidents for attempting to solve the issue with economic sanctions in Iran for the past 50 years.
Right.
So I think a couple of things occurred here. I think one, he's probably getting pressure from other countries in the Mideast in particular to try to take a route other than unleashing fury militarily on Iran. And I think also perhaps realizing that that's had somewhat of a limited effect so far, and we've got midterms coming up here in a little over 2 months, and probably wants to quiet things down a little bit as far as military action against Iran. I think that's my opinion. And are we running out of munitions? Is he thinking that there's limited impact from further military action without just going all out on Iran? I don't know. That could be part of it too. But the bottom line is these economic sanctions are a longer term solution as opposed to an immediate all out military conflict. And so I think what that means is oil is going to hold up here closer to $80 a barrel for the foreseeable future. And we'll see here how this plays out, because Iran came out for however much you want to believe this. And they said, look, okay, we've been waiting for this. We've got a 2-year plan to be able to withstand the pain of any economic sanctions. We expected this, so we really don't care. We've got a plan to, hold out for 2 years, which interestingly would be, throughout perhaps the remainder of Trump's presidency here in the U.S. So do they have that ability? Do they have that strength? I think they've got the fortitude. And again, we've talked repeatedly about how they're willing to withstand pain, that this is more of a religious war for them, at least for the mullahs and those that appear to be in charge, particularly also the Iranian Revolutionary Guard. So they're willing, no question, to withstand some pain and try and hold out. And, as I was saying earlier, they have bullets to quell any uprising or unrest by, citizens in Iran that they've already reportedly killed 30, 40,000 protesters already. And so they're willing to take that route to quiet or quell the any uprising or protests. In the meantime, though, inflation is rampant. It's close to 100% inflation in Iran. And that's certainly causing economic pain internally. The question is, can the people uprise against that, or will whoever's in charge, IRGC, be able to put down any protests or uprising by the people if they've done to date? Now, as far as the sanctions on oil, most of the oil that now is being exported by Iran, which is still around 500,000 barrels a day, maybe less, goes to China. And the big question is, we don't have details on what the economic backlash will be or sanctions will be against countries who continue to cooperate or do business with Iran. And it's tough to say you're going to go after China and put sanctions on them, whether it's their financial institutions or whatever, if they decide they're still going to buy oil from Iran. And so that's going to be a big question as to how that plays out. And what we have yet to see, probably we'll see Friday, what retaliation or measures the Trump administration imposes on countries who don't go along with these economic sanctions or this economic D-Day or fury that the U.S. is going to impose on Iran.
Yep.
So, the important thing is, I think this sort of drags this out a little bit longer. There's no immediate solution, which means oil is going to hold up here, I believe, around close to $80 a barrel. Iran continues to have a bit of a stranglehold on the Strait of Hormuz. The flow of cargoes through there is still very limited. And net, I think these names that we own that we've talked about before at $80 oil are cheap, and I wouldn't sell anything here. I would hold on to these names. And even though oil's retraced a little bit here, I'm looking, most of these oil names are up or close to flat this morning, which tells you the market thinks that if we're going to stay up here, we're not going to get any immediate or near-term retreat in oil prices. These stocks are still cheap.
Well, Bob, I was going to ask you is even if the Strait of Hormuz was open again, aren't there issues with the whole supply chain there in terms of turning things back on and getting things moving back the way they were? I've heard stories about oil, of things having to be shut in, and it's not easy just turning this stuff back on, getting the oil moving again.
Yeah, it's not easy, but it's probably easier than a lot of the reports state. And there's enough incremental oil that could begin flowing again to help ease the markets if you had total, complete free flow of cargoes through the Strait. And part of the key here that's kept oil prices from surging above $100 a barrel is demand from China has dropped off. China sort of ceased buying oil for their strategic petroleum reserve. Yep. So probably the biggest factor, the biggest variable here that has kept oil below $100 a barrel has been China demand. But, could they ramp up oil exports? Sure. It may not be at the peak it was before, but it's meaningful enough that if you had the Strait for whatever reason totally open, everything was flowing free, and Iran wasn't meddling in there, oil could pull back to 70, maybe below $70 a barrel. And then the question is, when does China begin to buy crude again?
Yep. Okay. So no changes to any of your positions?
No, I mean, look, the oil names, again, C&Q, it's my favorite name. I'm full up on it. So I wouldn't add the Oxy's the name that I would then add to next. And then continuing to own the gas lever names, Expand Energy and EQT, continue to own Chevron, Exxon, EOG, although I've, here a few months ago lined up a little bit on EOG, and they've been adding Oxy instead. So I wouldn't sell anything here. Okay.
Good morning, Mr. Peabody. Thanks for joining us.
Sure. Good morning.
Where is Charlie today?
Yeah, I'm somewhere in rural Canada, so I don't know what the connection is going to be like.
Okay. Well, looking good. Looking good. I'm down in San Diego.
Nice.
So, what are your thoughts? You got any thoughts on maybe Friday? What our Fed
I do. Yeah, let me follow up on two things I sort of pitched last week. One was the ag sector, and the other was cannabis stocks. There are a couple of follow-up comments I want to make. Okay. First, on the ag sector, after I pitched that last Monday, Deere reported on Thursday and made a strong case that this was the bottom of the ag equipment cycle. And I think that's very important because Deere is sort of the lagging, indicator of the ag cycle. And the important thing here, obviously, is what's happening to farmers' input prices versus their crop prices. And so input prices would be things like fertilizer and diesel fuel. And crop prices would be things like the grains. And the grains, are very, very constructive in terms of their chart patterns. And the fertilizer prices, obviously, and diesel fuels are obviously impinging on that. But I think the overall economics of the ag cycle are still very positive. So, what I'm playing there is MOO, M-O-O, which is the ag ETF. I really like the setup for wheat. You can play that. I play in the futures market, but you can play that in the, equity markets through WEAT. Intrepid Potash, IPI is doing well. CF Industries, ConAgra, CAG. So I like the ag sector is what I'm saying. And I think Deere sort of implies that things are going to get a lot better for the farmer. And so they're expecting an equipment replacement cycle to develop in 27, 28. In fact, they did raise, they've had a beat and raise third quarter and did raise their outlook. So that's very positive. So I just wanted to touch on Deere's.
What are some of the bigger holdings in MOO?
No, I don't know off the top of my head. I'd have to go back and look at that.
Yeah. All right.
So on cannabis, the update is today, and I haven't had a chance to look at it, but today on the DEA's website, they posted the corrected official evidentiary hearing transcripts. These were the hearings that took place between late June and mid-July. And those transcripts were corrected and posted today. There's about 2,500 pages. The important thing about this transcript is it will create the factual record for any future potential litigation that might arise around the rescheduling of cannabis as a Schedule III drug. So the next steps are for the administrative law judge, Derek Julius, to come out with his, based on this transcript, to come out with his findings, conclusions, and recommendations to the DEA. And then the DEA administrator, which is a guy named Terry Cole, will have the final say on whether this, cannabis gets rescheduled as a Schedule III drug. And that sets off all sorts of wonderful things for the industry, improves their cash flow because of lower taxes. It may enhance their ability to, we talked about this last week, list on the New York Stock Exchange, which is what Trulieve was able to do, which enhances their access to capital and institutional ownership. It starts the process of them becoming bankable, et cetera. So I think this transcript will be poured over today by those that have interest to see if there's any indications as to the biases of Derek Julius might take. But I am anticipating that Derek Julius will recommend a Schedule III filing for cannabis, and that based on the DEA's own contribution to the evidential hearings, that the DEA will approve it as Schedule III. Now, it may take several weeks, maybe a couple of months before Derek Julius rules. So, we may not hear anything until September, October. So it's very possible these stocks have had a nice run that they could pull back in this intervening period of no new information. But I would buy these stocks on any weakness. So those are the two updates from last week.
And Charlie, refresh us on what names do you like? I remember you saying MJ was one, MSOS.
Yeah. So the pure play, it would be WEAT, WEED. That is a very concentrated ETF that holds the top 7 largest domestic names.
Yep.
The next play would be MSOS, MSOS. And that is a much broader ETF, but holds a lot of the little names. And we've been expecting consolidation in this industry. So that would benefit from any consolidation, such as what you saw from Curaleaf's bid for Aurora Cannabis.
Yep.
And then the final one is MJ, Mary Jane. But that has an international component where there is good growth, both in Canada and Europe. So it depends on your bias and what you want. That's cannabis. I just want to mention very quickly what's getting passed around in the banking industry this week is the H8 data from the Federal Reserve last week showed very strong corporate loan growth, and so people are playing the rotation back into regional banks that would benefit from stronger net interest income, or NII. That's the spread income. That corporate loan growth breaks down into two pieces. There's the traditional C&I loan growth, which is running low double digits, and that's being driven by data centers, AI capex spending, et cetera. So that's going to benefit some of the regional banks. I get some of the names that people are floating around as beneficiaries of this are Huntington Bankshares, Key Corp, Fifth Third, PNC, et cetera. The other piece is the commercial real estate, which is now seeing a pickup for each of the last 3 quarters. I mean, an acceleration in lending to the commercial real estate. And I've been playing that on the multifamily side through Essex Properties. And then what was originally Avalon Bay that merged with Equidential Real Estate. And now is being called VMark, VMRK. So ESS and VMRK are the two names I've been playing on that side. But they're both, those names are supported by what we're seeing in terms of corporate loan growth. And then last thing I just mentioned, we had new home sales yesterday. They were down 10% month over month, down 6% year over year. Inventory rose another 2%. So you got 9.6 months of supply. So I just don't see, why, people are buying these names other than, they were washed out, but they've had a bid all summer. And they've done fairly well, but the home builders, I just don't see any fundamental support. So it's mostly positioning that I think is driving those. And then if you want to talk,
market isn't helping, I would imagine.
Yeah, I mean that's probably what the bid's all about. Is people have been expecting some sort of reduction in rates, and that's probably where the bid is coming from.
Yep.
Yeah. So we can talk about. I'll leave it there. But if you want to talk about PCE this morning or Warsh and Jackson Hole this Friday,
I'd love to get your thoughts. So PCE looked like a little bit higher than expected.
Yeah, I mean,
burger. Or?
Yeah, I think it's a nothing burger in the sense that, it was expected. It was pretty much in line. So headline PCE is running at 3.7%, core at 3.3%, obviously well above the Fed's target of 2%. Yeah. And that's going to, create some dissension, at Jackson Hole. And that, to me, is going to be the big theme of Jackson Hole is what sort of dissension do we get? So there's going to be dissension between the international central bankers that are presenting there. And then there's going to be dissension domestically, amongst the FOMC members. And then there's dissension between the Treasury and the Fed. So there's three areas of potential dissension. So let me talk about those three areas. So on the international front, I think you're going to get, the international central bankers highlighting that inflation is running, hot, and they want to tighten. And so we have the ECB and Japan both sort of poised to tighten. We've had Australia, Norway, Indonesia, and some others that have already tightened. And, I don't see any change in the international bias to tighten. The one country that has not is the Bank of England, or one central bank that has not is the Bank of England. So if Warsh decides to be less hawkish or not hawkish at all, I don't want to say he's going to be dovish, but let's say he's not hawkish. He's going to have some dissension from other central bankers at that Jackson Hole meeting. Then domestically, you've got more and more members of the FOMC meeting looking at this PCE data and saying, we're running hot. And I wouldn't be surprised if in September we have more dissension. And then finally, we have hike. I think there is going to be a hike, which is completely contrary to what the markets are saying. Yep. But I think there has to be a hike. Otherwise, Warsh is going to lose credibility. And part of it is because you have the Treasury working against Warsh. I mean, Warsh tactically said, "I want the markets to do the work for me." Yep. And then you have Besson coming out and intervening in the markets, and that's taken away Warsh's tactical approach. So I think he's going to be forced to hike in September.
Yeah, we're supposed to be shrinking this balance sheet, not expanding.
Yeah. Well, that's the thing is if if Besson uses the TGA account to fund the buybacks, that's the equivalent of QE in my mind. But if he uses T-bills to issuing more T-bills to fund to fund the buybacks, that's balance sheet neutral. So I'm still not sure that they've announced a definitive approach to funding the buybacks.
Yeah. All right. So no real new trade ideas. Updates on cannabis are excellent. So thanks for sharing that. In terms of how quickly this can flow through the system, in terms of getting these things banked properly, et cetera, and then even getting institutional investors to finally be able to buy some of these things, is it a 1 to 3 month process, or can this take much longer?
No, I think it takes longer. It'll be a 27 type of event before any of that happens. I mean, so after Julius, the administrative law judge, Derek Julius rules, which could take, as I said, several weeks to a couple months, then the DEA administrator, Terry Cole, has to then determine, based on Derek Julius's recommendations, whether to reschedule it. And that can take, a little bit of time. So, it could be November, December before we get a final ruling. The only caveat would be, the administration has been pushing for this rescheduling. And so the DEA could act very, very quickly if they wanted to. And so it could be, an October, November type of ruling.
Okay. All right, and I'd be remiss before we close if you guys have any thoughts on the mother of all earnings announcements after the close today with Nvidia. Any thoughts?
Everybody's watching.
Everybody's watching. They're holding everything up.
I think the bands are like 195 support on the downside and 230 resistance on the upside on Nvidia. 5 to 6%, and you could get a very muted reaction because you have Jackson Hole on Friday.
I agree.
So I'm not, people, I know it's an important announcement, and what is it? 92 billion of revenues is sort of the guidance, and they'll probably beat that because they put out guidance that they can beat. Yep. It'll be, I think obviously you want to watch the reaction to the news more than the news itself.
I agree.
And,
all right.
It may be more muted because of Jackson Hole.
I agree. Okay. Anything else before we wrap, guys? Right on the button, 7:30 my time.
Yep,
all right.
We're good.
We're good. Have a great day, everybody. Thanks for following us, watching us. We will see you back here next week. Have a great day.
Thanks, guys.
Thanks.
Thanks, Bob. Thanks, Charlie.
Yep.